mate, you've made a grave mistake. You've let me control programming today, and that's going to go rogue.
It already has, as we've seen.
Money miners, if you didn't listen to an episode that we did a month ago, we let anyone just dial in and pitch us a stock. Got some pretty good feedback off the back of it. People like the
glowing
format.
feedback, I'd say.
I think the listeners like the chance to chime in as well and have their voice in the potty. We welcome that. I thought the format was really cool. I got a bunch of ideas off the back of it, stocks I'd never heard of before, and that doesn't always happen. But there was a lot of them on that chat, so I feel like I'm actually more out of touch with the market than I realised. So I'm doing it again. You let me do it again a month later. Money miners are dialing in to pitch us a stock against JD's will.
Against my will. Mate, I'm keen to hear the ideas that get churned up, as we saw last time. And as we know, some retail folks out there, they've got the best ideas. They go so deep on just one name. So it really churns out some fascinating ideas, and you get to hear how different people think. So I'm excited to share what we've got in store today.
But first, mate, I am pumped. I'm pumped like I haven't been pumped in ages because we're doing another Twitter Spaces stock pitch thing, but also because we're going to Newcastle next week, and I'm super pumped to see some really industrial stuff that is going on in Newcastle. The things like the port there, some coal mines we're going to check out, but most of all, we're going to see the wonderful team at Sandvik Ground Support in the flesh.
We are. We're going to see Derek Hurd. I was going to go about this ad in a different way. I was going to pitch a great idea. Everyone just put in an order for the ground support that everyone needs and everyone loves here in Australia, Sandvik Ground Support. So I'm going to pitch it to you anyway. And for all the people out there running an operation, you can either give Derek Hurd a call or you can download the app, put in an order for what we all know is at the cutting edge of R&D, what we all know is the best ground support in the industry, and get that done today.
Go Sandvik Ground Support. To the money miners, let's hear your pitches. Twin, you kicked us off last time. I see your eagerness again this time. What have you got for us today?
Mate, I'm surprised you want to talk to me after last time, to be honest. But, like a degenerate gambler, I've always got a few tricks up my sleeve. So I'm going to go back down the WA Gold path, if that's all right.
Oh, we love WA Gold.
Please do.
So, got a stock called Auric Mining. So ticker is AWJ.
Oh, yeah.
So I don't know if you're familiar with this one, but they've got a pretty unique approach in the junior mining space where they go off and work reasonably small deposits, but focus on cash generation, and they're slowly building up. The thing I really like about them, though, is they've got a couple of gold projects, one which is a gold project called Munda, and they've done some starter pit mining at Munda, and they've pulled out about close to 200,000 tonnes, and they've run it through Black Cat's mill. But the thing I really like about them is the starter pit that they've done at Munda is just part of the bigger Munda resource. So the starter pit has generated something like $35 million cash to them, and they're currently sitting on a market cap of about $55 million at close today. So I suppose the elevator pitch about Auric Mining is that they've basically mined a couple of percent of their mining resource. Runs at about it's getting close to 200,000 tonnes if you lower the grade a little bit, but at 0.5 grams per tonne, they've got about 145,000 ounces, all open pit stuff. So when you look at the metrics, they're sort of 55 million market cap. They're currently sitting on $34 million cash. Right. They've also got some gold yet to come from the latest mining operation. They've still got some gold to come out of the Black Cat mill. Yep. Which will probably generate maybe another 5 or so million. So they're getting close to 40 million in cash with a market cap of sort of 55 million-ish.
Yep.
On top of that, they've got Burbanks. So they bought the Burbanks mill for about 4.4 million. So that's paid for. They're going to have to do a fair bit of refurb on that.
Yeah, yeah.
And
that's a small mill, right?
They've also... Yeah, it's fairly small. So they're looking to expand it potentially, but when they've effectively off-taked, 3 or 4% of the mining resource and generated $30 odd million in cash, it's not hard to extrapolate that the remaining 95% of the resource is worth more than $5 or $10 million, right? So, and they've got other assets. They've got Lindsay's, which is sort of going through the Warden's Court at the moment, which has got some of the tenements under debate. But they've got other tenements as well. They've got Red Dog, and they've got $2.5 million worth of mining camp, accommodation, etc. So
This is one of
just
those.
from an EV point of view,
This is one
Sorry,
of those BML JV type arrangements, was it, Twin?
yeah, they had a 50-50 with BML. So
Yeah.
BML's come in, mined a starter pit. They've shipped the ore off to Black Cat.
Yeah.
Black Cat's processed it. They've split the money. They before this second round of campaign, they had about 8 million in cash. They're going to probably settle now with 40 after this campaign. So they've still got 95% of the resource to go. So whether they do more toll treating arrangements or whether they then refurb Burbanks and run it through Burbanks, but just at an evaluation metric, like they've already proven that the resource, I think, is pretty good. They're budgeting at about 6,100 ounces to come out of the trial pit, and so far they're at about 7,800, 7,700 ounces. So the mining's coming back at a higher grade than what they've sort of budgeted for. So I think the resource is looking pretty good. It's all open pit. They've got some amazing results in their grade drilling. Like if you look at some of their mining hits, they're sort of plugging out, some grade results like. Sorry, I'll just pull it up. Things like 17 meters at 17 grams, 46 meters at 8 grams, 16 at 12, 13 at 14, 11 at 16, 19 at 9, 18 at 9, 6 at 26. So, the resource looks pretty solid. It's definitely got some high grade pockets in it, but ultimately they've mined 3 or 4% of it, and it's coming back at a fairly good result and generating lots of cash. So from an EV point of view, you're looking at something that's, EV 5 to 10 million, with 200,000 ounces.
They added $6 million. Like they started the quarter with stuff all cash, the quarter four last, and then added $6 million. Yep.
You forgot some of the best anecdotes, Twin. This was the company that had the ex-journo that was on Hot Copper with a few different accounts just pumping the stock, which was hilarious.
Yes. He was a
he worked in Southeast Asia.
Wasn't he a Walkley winner? It was like
he was, yeah. He worked in Southeast Asia as a journo for quite a while, but was working in an IR type capacity for the company. I think like to our conversation, whenever that was a month ago, was Twin. The playbook is pretty similar to what you pitched Kaiser Reef at the time, like value in the in the gold space. Just got to see how much it kind of moves with the gold price and how they return that cash or how that kind of happens.
JD's allergic to trusting management.
He doesn't like
anything accretive.
He doesn't like cash, does he? That boy
just hates money.
Cash to JD's a problem.
He hates money. yeah, he doesn't let it go very far.
We'll see what the team does with the cash that they've got. As you mentioned, it's on those like value metrics, it just looks wicked. Keen to see how they go about it, but at 7,500 gold.
What's the risk, Twin?
I don't really. I think the risk is that people get bored if they decide to spend the money refurbing Burbanks, and then it takes them 12, 18 months to start putting the ore through the Burbanks mill. I think it's more a risk of boredom than anything else. But in the meantime, they've got money to go do drilling, and they've got some news coming out about Lindsay's. So there is a risk that they don't get the main Lindsay's tenement. They are looking to potentially mine that as well. But they've got a track record. So I don't personally know management or anything, but when you see these small guys, generating a fair bit of cash, like I think they had Jeffrey's find, which was sort of a similar deal, but obviously not in such a great gold price environment, where they generated about 112 million in gold sales. So I think management seem to be fairly good when it comes to knowing how to get gold out of the ground and doing it at a reasonable all-in sustaining cost. And it's one of those things where the gold price is so high at the moment that literally all these little gold, guys are just, the amount of cash that they're generating is just ridiculous at these gold prices.
Twin, is there a deal
So-
to be done with anyone here? Like if we get, a bit ambitious, like they're in a good patch of land there with tenements and stuff, and you talk about a company where the EV is very small, or do you think that just doesn't get past the
Well, I
outlook for
definitely
management?
think there's 4 mills in the area. So they've got Black Cat was just the one that they chose to, and there's some interesting dynamics around how the mills operate. Like some mills will just do all purchase arrangements, which they don't want to do, which sort of rules out one of the mills in the area. But they've got 3 other mills, and the reason why they chose Black Cat, I think, was because Black Cat had some availability. Obviously with the gold price where it is, I think there's a lot of smaller guys looking to toll treat their ore and stuff. So
The mills are so
I think
full.
they jumped at the chance to run it through the Black Cat mill. But I think the cash is maybe one of the things that might stop them being taken over. Like if someone's got to take them over at a premium and they're paying a premium for the cash, maybe that's a potential risk for them not to be taken over. But ultimately, again, it's one of these plays where they've just got so much inherent value that it sort of, again, limits the downside. And, like, why would you go chase an explorer who's potentially could find 100, 200, 300,000 ounces and pay $30-40 million market cap for them when these guys are trading at sort of an EV of 10 to 15 and they've already got it?
Yeah.
So
I know you've got another one, Twin,
proposition.
but I'm sure we'll come back to you. So I'll get Decker
Yep.
to give us his pitch on. I should probably introduce you first, Decker. Decker was loud and proud about his MinRes call, and he was proven very right. So Decker, welcome to the stage. Let's hear your next big pitch.
Thanks very much. You can hear me okay?
Yeah,
Loud and clear.
Great. Okay, so the one I want to do is Red Hill Minerals. It's the one you've talked about it before. It's got the Onslow royalty to start with. Look, 64 million shares, $5 share price. So the market cap's 320 million, of which they've got 70 million of cash. So the EV is 250 million. The Onslow royalty at the moment is generating 29 million. So, and they have about 1.5 million of just sort of standard head office board costs, etc. So if you take that away, you've got 27.5 million on an EV of 250 million. So you've got an 11% free cash flow yield on the EV to start with. Now that's going to continue in perpetuity no matter what for the next 20 years. It's as bulletproof as you get unless there's something that completely knocks out the Onslow infrastructure. The only thing that happens is the iron ore price can go down a bit. If that does, they're exposed a little bit, but nowhere near as much as the miners because they've got no costs. So that gives you an 11% yield. Now, the good thing is they just released their full year report, and what we like to see is dividends. They increased their dividend by 78% fully franked. So once you do that, you're getting a 33-cent dividend on a stock that's just about to go X. So you're getting a 6.8% yield. That's probably going to grow at 2.5%. So the base case is 9% yield, and that's all bulletproof. And the next thing that's going to happen is Onslow. I should mention the company also doesn't pay out all of the free cash flow. It spends about 9 million on exploration, and I'll talk about the upside from that later on. But the next thing that's going to happen is we know Onslow's going to expand production. They've got 2 extra transhippers coming. Chris Ellison has talked about it numerous times that their plan short term is to go to 50 million tonnes. That might happen within a year or 2 years. As soon as you go to 50 million tonnes, all of a sudden that 29 million of free cash, you can even contract the iron ore price by 10%. But once you're at 50 million, you're looking at about 36, 37 million of cash on an EV of 250 million. So again, you're looking then at a dividend yield coming in at about 12%, and that's basically in the bag. You don't have to worry about that at all. Now the next thing that's going to happen, and this is really interesting, is the big mistake people make with this company. They say, "Oh, they're blowing 9 million on exploration, buying up royalties and everything." Nothing could be further from the truth. If you look at the management of this company, Joshua Pitt and Polly, they have got one of the most outstanding track records in WA for exploration and developing tenements of anyone in the whole country. They were described as the Berkshire Hathaway of the mining sector in WA. Now, to give you an idea of just how good they are, I'll
Safe
just
hands.
mention
Safe
one
hands.
Yeah, safe hands, exactly. They just bought one royalty recently, Sandstone.
Yep.
Bought it for
As
$4 million.
as a ripper.
Everyone's missed this.
As a ripper.
Bright
Awesome deal.
Star has come out and announced a couple of things. Firstly, they've raised 180 million to build their first plans to develop the Goldfields thing. But they say they're also going to use that funding to take Sandstone to pre-feasibility and then onwards and upwards to feasibility. And Sandstone very likely will be producing come 2028, probably about June 28. And they've released two sets of different results from Sandstone, and the results are outstanding. To run a gold mine, typically you need 1 to 1.5 grams per tonne. These are producing results of 3 to 10 times that amount. You're getting SAs of 4 to 26. Their highest SA was 40 grams per tonne. You can put these results through yourself. It's not very hard, but put them through any search engine, a Gemini and a Claude, and say, look, analyse the two results, the one on Feb 5 and the one on Feb 23. They'll come up with exactly the same thing. They'll basically say, look, this project's a near certainty to complete. And when it does, you're looking at a royalty stream for Red Hill Minerals of about 10 to 15 million per annum, probably over a 10-year period. So if you put that together with the Onslow expansion, you're looking at a company that's generating probably 45 to 50 million of cash and free cash flow on an EV of $250 million. So you're looking at a free cash flow yield of 20%, of which they'll spend 9 of that 50 million on the exploration, the continued buy of royalties. If they do things like Sandstone, I'm perfectly happy for them to do as much of that as they want, because they're getting a return on capital above WACC with all of that stuff. And the final thing I'll say before questions is our interests are perfectly aligned with them. Joshua Pitt owns 34% of the company, and Polly, he's the chairman, and Polly owns another 24%. They've had a long history. They run a very lean operation. They're basic. You can see it from their annual reports. They've got these crummy photos on the annual report. It looks like, I mean, my 10-year-old son could have put together an annual report that looked better than what they've done. But you can tell they're running a very lean operation, and their strategy is, look, just put everything into any spare cash that isn't paid to shareholders in dividends, just put it into the ground and drilling and finding the next best resource. Of those next best resources, they've got some really prospective tenements. So they've got Broken Hill. I don't need to tell you, but that's basically $100 billion province historically, and they've just had a very interesting little discovery that they've discovered smoke, I would say, that could lead to fire. And the Anabama Copper Project, look, that's nothing quite yet, but anything copper in South Australia has got potential as well. So look, I don't really care. The advantage of this is you've got an explorer, and normally with the explorers, they find something good and then you get the huge dilution. With this, you've got heaps of cash on the balance sheet, 70 million, and you've got 29 million upscaling to 50 million per year coming in. So they can just choose from all of their best drilling results where to focus on to get the next big find and make sure that their return on capital is much higher than their cost of capital. They own a couple of really good tenements. They own all the tenements, the Red Hill tenements, where MinRes does all its iron ore. They own all of them for gold and the other minerals there as well. So I just think I describe it as perfectly safe. You're getting 9% total return from your current yield, going up to 14 when Onslow expands, and then you've got all these upside options that are difficult to value, but every time one of them comes in, it's just going to add more and more value.
Yeah, I agree with you on your thesis on this one, Tekka, and I think the company will just get bigger over time and find its way into relevant indexes. It's kind of it'll get there. A few points I wanted to point out there. I did notice the dividend policy on Onslow is only to pay out 50% of royalty income via divvy. Then I've got another one to throw into the mix for you. This is a research project, not even relevant to your pitch here. But did you know, like, there's part of that whole, the stuff that can feed Mins, feed Onslow on the whole road, etc.
No, look, I'd actually already looked at that, and I can answer it now.
No, I've got one for you. Cullen Resources. Have you heard of this one? So, mate, why I bring them up is this is a small cap, but they've got a 1% royalty. I think it's on cathode bore. When that eventually kind of comes into the mix, and I find it interesting because you see Perth Capital, which is Josh Pitt's investment company, is a big shareholder there too. I think he's sub 20%, but above 15%. And this Cullen Resources, they recently sold one of their royalties. They had this like FMG royalty, and they sold it not to Red Hill, despite Josh being a big shareholder. They sold it. They sold it to Spencer's company, Vox. They sold it to Vox Royalties. So anyway, I'll throw that in the mix. I think there's something interesting if you pay attention to that Cullen too. So
speaking of Vox, I know.
Can I just answer your question on the dividend thing as well, because that's super important.
Yeah.
So they didn't say, look, we're going to have this cast iron of just paying 50%. What they said was they would pay at least 50%.
Yep.
And when you include the tax as well that they're paying out in franking credits, it turns out to be a lot more than 50%. So they're paying out at the moment 33-cent yield on a $5 stock, which gives you a 7% return. But then the other thing is that as the Onslow expands, they're getting more and more free cash. My view is what they'll do is, look, if they've got good exploration projects, they'll spend on that. But if they don't, they'll up the payout to 70 or 80%. So all the extra free cash, they'll just keep pumping into dividends if they haven't got any good exploration. And if they have got good exploration, they'll pursue that as well. So you win no matter what. But I wouldn't say, look, it's just a hard and fast 50% and that's it. And when you account for the tax you're getting through the franking credits, it turns out it's about 70%.
I can't argue with too much of that. I think just on the Sandstone deal, that'll go down as one of the best kind of small deals we've seen in a long time. And I'm sure there were heaps and heaps of other royalty players that would have been seething mad that they didn't get a look in on that deal.
Yeah, well, it was apparently a process that was run, but I don't think it was a process that was
process
run.
in quotation marks.
It was pretty bilateral, that one, but
that'll pay them good money, I reckon.
Yeah, look, I can explain the logic to it. It's just two people, and they'd been sitting on this royalty. They thought, look, there's probably an 80% chance it's worth 0 and 20% chance it's worth 50 million. But if someone comes to you and says, look, I'll give you 4 million up front, and by the way, if we produce, you'll get 20 million. If you're pretty poor, you'll take that deal every day. You get 4 million in the bag for something you think 80% probability is worth 0. So that's why they sold to Joshua and that. But it was an extremely clever deal because it looks like they'll get 10 times their money back on it. So it worked for everyone.
I reckon we could have run a process and drummed up a bit more interest than that. But I take your point, Decker. It's $4 million is nothing to sniff at.
Trev, just a quick question. I'll do a left field one here, but do you take mining infrastructure companies?
Yes. Yeah. Oh, is this DBI?
Yeah. Can I do a quick pitch on that?
Yeah.
Had a good run, hasn't it?
Yep. Tell me.
Yeah. Look, so I first bought this stock at about 230 3 years ago, and everyone was crapping on me. Oh, it's in coal and everything. Aren't you a disgusting person buying into coal and everything? And I said to them, well, look, if you give up your consumption of iron ore, I'll happily give up my shareholding in DBI. But anyway, no one wanted to know it because coal's dirty, blah, blah, blah. Look, the thing about this is it's a monopoly. And any cost savings or revenue gains basically go through a bottom line. So what happened was it changed. I began buying, it used to be regulated by the Queensland Competition Council. That regulation stopped October 22. So all of a sudden they can tariff escalate. They tariff escalate each year at 2.5%. But because all their costs are just at about 2/3 of the total costs of debt, if you're growing the revenue at 2.5%, you can naturally grow your yield through time in perpetuity by about 5% just because your costs are flat with your interest costs. So that's guaranteed. You've got 7%. You've got 7% yield, 5% growth that gives you a total return of 12%. if you look at the ASX, the average return on the ASX is 10%. So really to get a fair value, the fair value of the stock really should be $6 to give you that 10% total return, not $5. But then there are a few other things going on as well. It's a very low beta stock. It's got a beta of 0.24. For those who don't know, beta is the correlation of the overall stock with the market. So my view is the market's hugely overvalued at the moment. But if the market falls 20%, DBI is only going to fall 4%. So I just basically use it as my bank of cash. And if the market falls, I can sell DBI and buy all the crap that's fallen. If the market goes up, I'm still a happy holder of DBI. Now, the other thing is it's going to actually grow the yield more than 4%. The capacity of the terminal at the moment is 84 million, but they're only using 60 million. They've got an other revenue line that grew by 5 million in 1 year. If they can get that capacity used up to 84 million, then that could theoretically sort of be another 20 million in a couple of years. So my guess is they've set a policy of 5%, but in practice they've grown the yield at 10%. I think they can probably keep growing the yield at maybe 6 or 7% with all the little nuts and bolts that they're doing to it. So this one is, again, it's perfectly safe. You'll get 12% return guaranteed, but any sort of extra revenue or cost savings they get, it all goes to the bottom line. So you might end up getting 14 or 15%, and it's extremely simple.
You had me at Monopoly, mate. I'm a fan of the monopolies, but we're degenerate mining stock punters. So you had me, but you lost me
it's
as
a
well.
mining stock because it's the largest met coal export terminal in the world. It exports 84 million tonnes of met coal.
Thank you so much, Decker. I'm gonna say we've got Ford Phil. I'm probably saying your name wrong. Sorry, mate. But I'd love to hear your input.
Cheers. Yeah, no worries. I've chosen an Australian developer to promote, which I've taken a look at. I don't own any stock yet, but I think it's highly compelling. So it's Aurum Resources, ticker AUE. It's a Côte d'Ivoire gold developer.
Yes.
PFS will be out in April. It's trading around 51 EVOs against 3.9 million group resource at a market cap of 250 USD. So Juraco, it's a peer, well known, probably a year behind them in the development timeline. They're at 190. And I think it's quite a compelling opportunity. These guys built CZR Resources, which they sold for 172 per oz and like 700, Australian. And they're basically doing it again with the larger resource this time around and the same management team. So I don't know why it's cheap. Montage Gold.
They sold out. They
came in at 10%. Yeah. They came in at 10% in July at a strategic placement with no discount to VWAP, and they just crossed below the 5% threshold last week. So they've been a consistent seller.
Yeah.
Like the second the hold came off, they just started dumping. So who knows why? A friend of mine actually spoke to them not under a week ago, and they basically said that the resource is dispersed and they want cash for their other projects, which doesn't make a lot of sense because they're at like 6 billion market cap, and they get 225 million for selling Aurum shares. So why not just do a raise, I guess? But they got this Bundali asset. I can't pronounce it, but whatever. It's the same belt as the Barrick Tongon asset, the Bugiu Siyama shear zone. So the geology is a bit different from Kone, but that is sitting at that's the main asset they're developing. Like I said, PFS out in April. They're aiming for first gold in 2 years. So that's 3 million ounces. And they're drilling 100,000 meters this year. And they own their own rigs, 12 diamond rigs they own. And they got to a $45 per meter drilling cost. So if there's any company in the world that's lower, I would, pitch in because it's the lowest I've heard at least. And discovery costs are $750 per ounce. So it's 50-50 infill and resource growth this year. So that should drive some good news flow. And metallurgy is perfect. No problems there. Coarse grind, low capex, 250 to 300 to build the first Bundali asset. And on my numbers, you're probably at a post-tax NPV of like 2.2 billion at first pour. So that's 1.7 today if you use the 8% discount rate. So I think this could be like a 5x in 2 years if you can hold through. You'll get the PEA to first pour re-rate in 2 years, and that's without their other assets. So yeah, that's the pitch.
Are you
I'm
So-
happy to take any critiques.
I think the Tieto example you gave, which is the track record of the company, sticks in a lot of people's mind. They had a lot of problems, and you made the comment, I can't remember exactly the word you used there, but patchy is how I kind of interpret the resource. And you can look at any of the cross sections and kind of think
That's
through
right.
some of the assumptions there. And
Yes.
yeah, montage selling, like your friend said, with that kind of comment in mind, I think goes a long way. Now, when Tieto was coming up and running, they had a great operational kind of team that were getting it online, but there were a lot of problems, and a lot of those problems were glossed over.
It was a resource model.
Yeah,
Yeah.
But the fantastic gold price appreciation glossed over a lot of the problems. But the share price was in a real bind for a long time there. And yeah, I think to put it in a nutshell, they were assuming a bit more than was actually in the ground, and much closer defined drilling proved what that resource really turned out to be.
I think this has a lot going for it. You're right, it does screen cheap, and there's clearly like inventory in the ground here. I do think, like JD says, the market's memory is long duration, and you know, you look at the style of this deposit. There's a lot of similarities when you see these like very kind of these thin intersections on the cross sections. It's hub and spoke. It's yeah. I'm not a geo, so I don't want to go into the realm of unpacking their mineral resource. But albeit I did try to flick through it a bit. I think it's warranted for screening cheap, and it's also warranted to think twice about it too, just given the similarities with who's putting that resource together as well.
Yeah, I agree. I mean, it's the main issue with these deposits. You have these, like, there's mainly two styles of mineralization in country, which is the Côte style, which is like an intrusive hosted bulk system, it's called. I'm not a geo either, but just reading the reports. And then, which is very broad mineralization. And then you have the, Bundali and the Tieto shear hosted load system with like this, it's high nugget effect, quartz veining. So obviously there's the risk of, you can do a lot of tricky stuff in your geological model to like inflate the ounces and stuff based on the, I guess, interpretation between the veins. So yeah, I mean, Kona is like a 1.18 strip. This will probably be much higher, 3 maybe, and 2.5 maybe. Who knows? I mean, we'll see in the PFS. So it's definitely a risk, and maybe that's the main explanation why it's trading cheaply. But I mean, at these gold prices, it doesn't really.
They
Like, you can have
they
a lot of
paper over a
dumps
lot
in
of
your luck
cracks.
model, I guess. Yeah, exactly. I mean, you can just blast ore and call it a day, I guess.
Appreciate you calling in
yeah.
and sharing the pitch. Yeah.
Thank you.
Cheers.
We've heard a handful of pitches already here, JD, and they're pretty interesting. They're pretty speculative. Not everyone's got the appetite for the very speculative pitches out there. So let me pitch something that has a bit of a different proposition to it. I'm talking about Exceed Capital's SP Property Trust. These are specialised trusts designed for a specific commercial property. It comes with a very stable cash income paid as a dividend to unit holders, and on top of that, there's a cash uplift that comes with just the rising property value.
I think that is a great idea. We know everyone out there might not have the risk appetite for a $5 million junior. Exceed Capital, the SP Property Trust, as you mentioned, great tenants. They've got a defined life. It's a private vehicle. This isn't a publicly floated thing. It's checking a lot of the boxes. I reckon it could check the boxes for you out there as well.
Go Exceed Capital. Back to the stock pitches. Josh Baker, I see you're on stage. I loved your contributions last week. I'd love to hear last month. I'd love to hear what you've got for us this time.
Yeah, I'll just start on with Aurum. It's probably a little bit of a gambit there. They're going to make a project that looks quite good with no intention to build it. So I think it's one of these ones where you don't repeat Tieto by actually building it, you sell it before. So probably something to keep in mind on that thesis.
I think that's fair.
No, one I've sort of, I mean, that's sort of the feedback I've got whenever I've sort of spoken to them or from others who have as well. But yeah, one I'm going to highlight, is just because it's my new punt, is Somerset Minerals, SSM. So they've got this big land holding up in and around Whitecliff as well, up in, I think it's Nunavut or however it's pronounced in Canada. So it's a bit cold and a bit icy. But I think what they ended up doing last year was the equivalent of a technical discovery at the Jura prospect, where they had some pretty good intercepts of 30, 40 metres of copper from near surface. Drilling was relatively shallow, with grades that sort of range between like 0.5% and 2% as well. So once the spring kicks in, I think it's, we've got to go in spring. I always get my hemispheres around the wrong way. They should start drilling pretty much any day now. So just waiting for the announcement of mobilisation. They'll run RC and diamond drilling. So I think the main aim here is to really test the Jura prospect with about 3,000 metres of drilling. Once they did the drilling and before it got too cold, they did run geophysics over there and identified the signature for the Jura prospect. The IP anomaly seems to extend to at least 600 metres depth. And in that process, they identified 2 parallel structures as well. And I think with the chargeability high and resistivity low, there's a view that the deeper you go, the richer it potentially gets to. So this 3,000 metre program could be quite high impact in the sense that it might be able to prove something that is, if it's not considered commercial, very much on its way to being a commercial prospect, because obviously where it's located, the hurdles of commerciality is a lot higher than many other places in the world. So I think right now where they're running about 200 metres of strike, say there's a width of about 30 metres, 175 deep, you might be talking about 3 million tonnes at just under 1% copper potentially right now, which wouldn't cut it. But if you can sort of step out along strike and at depth, the depth targeting I think will be at about 400 to 500 metres deep, so getting quite close to this IP anomaly at depth as well. If strike can get opened up to maybe up to 300 metres, maybe that thickness does potentially increase, say 50 metres thickness, 600 depth or 500 depth, you might be talking something more like 15 to 25 million tonnes. Ideally, if it gets richer and you get something in the mid-ones, you can be talking some pretty serious critical mass there. And on top of that, if you do drill the parallel structures and find some sort of repeats, that again sort of further opens it up. So I think this is one of these trades where if things don't quite go right, it probably goes down 20, 30, 40%. But arguably, if that high case scenario I've just sort of fleshed out starts to look true or more like the case, it probably goes up 3, 4, 5 times, because right now it's a 25 mil market cap. You could argue something 20 million plus tonnes and that still remains open or has parallel structures could arguably be worth more than 100 million at that point. So timeline on all of that is, waiting to get the announcement of rig mobilisation to site, get started on the drilling. You could be maybe talking 4 to 6 weeks for drilling, maybe a bit more, and depending on how they batch assays starting in a similar time frame or a little bit later. So it's sort of a catalyst-driven trade for the next 2 to 3 months. It's funded.
22 million market cap, 5 million cash. I saw Regal SG hit stock by substantials. There's, I'd love to know, like what happens. Drilling results come out and you don't see enough promise there. Do you just is that the you change your mind at that point?
Punch it out.
Yeah.
Punch it out.
Binary. Yeah.
So position sizing on this for me is like 3-4%, right?
Yeah.
So drill results aren't adding up. It's not going to show that commerciality. You've got to get out, and then you can always come back. There's a matter of land holding, a lot more prospectivity, but that's much longer term work, so you don't necessarily need to hang around for that. Then again, if you start getting those results, drilling deeper, 50, 60 metres, maybe it does get a lot richer in copper, then that's probably where you sort of scale into success as well. So it's probably this, event where if it's not good enough, get out. If those results are starting to look really good, then you might consider scaling up. I think when they did the drilling last year, they did show visuals as I went as well. And I think if you go back to what the assays were and what the visuals implied, they actually weren't too far off each other.
Yeah.
So they tended to be pretty reasonable estimators as well. So if they sort of keep with doing the visuals and remain reasonable estimators, you might start to get some hints a little bit earlier on that as well. But I mean, if there's an argument that success gets you over 100 mil market cap and failure sort of gets you down at 15, 10 mil market cap, you know, you got a pretty compelling payoff profile of, you know, between 5 or 10 times.
SG Hiscock has been adding. They've yeah, wow. So it wasn't just the placement they bought. They've been adding stock since. Huh. I'll follow that one, mate.
That yeah, that fund is his name's Adrian or something. He's he's right in the weeds on these small caps, so he goes pretty hard, and he's had a pretty good run at the moment as well. So not that I generally base my decisions on what other guys are doing, but he's runs a pretty good, interesting fund actually, to be fair.
Mike and Chris, kind of MD and chair, they've done work together as well in the past as a bit of a duo. Are you familiar? You like management, or how do you think about that aspect?
I've never spoken to him. I don't know much about the history. I'm just focused on the opportunity. You know, drill's done. They look like they do good work on this project, and that's it for me.
I like it. Nice and simple. Any other ideas kicking about in your head, Josh?
Another one, and I'm a bit of a bag holder because I've written it up and down, but CZR is probably worth a revisit. That's one I've sort of tweeted about a few times too, because you're earning 28 cents cash, it's down at 30. The first pass drill program hasn't really hit the lights out. It's actually quite structurally complex, that top camp prospect.
Yeah.
But I think between that and then the work they've done at the Franks patch, which is sort of sitting a little bit north, I think there's like this basalt cover that actually starts to creep into the southwest, and the work they've been doing, particularly on identifying the rocks and looking for the sanucatoids as you do in that area, sort of vectors them to that southwest. So I think, you know, the first 4,000 metres is a bit of a flop. They'll come back and do the other 4,000, but they'll change some orientations as well now that they understand that structural complexity. Well, it actually wasn't until they did that scissor hole that they really realised what was going on there structurally. And then I think what the rest of this year will look like will be probably a lot more back to basics, sampling, scout drilling and things like that to really understand how that entire system is potentially orientating under the basalt cover. So there's a lot of work there, but they got like $70 million or whatever it is, so they can definitely, you know, afford to do it. So it's quite interesting. And I think what's kind of been missed is in that southern area, or southern to the Pilbara stuff, down in the Midwest, they've got this tenement area. They kind of call it the Edamweta area now, but it had what they don't talk much about anymore, but the Butterdoo project, which is a titanium magnetite vanadium project. So it's not chalked or anything, but they've done quite a bit of work on it. So it sits there. I think there was a view to try and deal on it if they dealt with the Chinese for the iron ore asset, but that's kind of off the table now since you can't really get groups like that approval to buy assets.
They tried.
But towards the north of that tenement package, because this tenement just sits in the same sort of belt as Deflector under Vault.
Yeah.
So up north, Edamota, it's 12 or 13 conductors on a 2K belt. So there's apparently some land swap being done by the state government. So it got classified as a reserve, but like the lowest level of reserve. So it just requires a lot of extra steps and agencies involved to get a POW for drilling. So they're sort of working their way through that. But I think that program, once it comes, will be another 10 holes, testing several of the conductors and seeing what's going on there. So there's a copper-rich eastern side and more zinc-rich out to the west and very, very lightly touched by drilling. So there's a couple of opportunities there in that project too. But I mean, one thing I like about a play like CZR is when you buy them near at cash backing, you can afford to go through a couple of failures until you hit the results. And, you know, Solstice is a pretty good example of being able to be patient when you back smart people with money and you buy them cheaply enough.
I mean, they're pretty damn close to cash backing right now. Like, yeah, very, very close. I I've got a funny confession about this
4%
stock.
on 70 million.
So
Sorry?
I've got a funny confession about this stock. So JD and I went to the AGM of CZR last year on the off chance, some like 1% chance we'd have a chat with Creasy while there. And not only did Creasy not come, but Annie couldn't make it either. So we fully lucked out. We'll try again next time.
Yeah, and he was too busy working out, counting all the money for Saluka.
Yes. The AGM for Zag was like an hour before, but should have gone to that one.
The Solstice play you reference there as well. That's been a cracking last month.
Yeah, that's half luck for me. Smart thing was back buying that at less than cash back in April 24, and that was before they bought Nanity Well. The way Nanity Well has gone is, I'll just say luck, because I didn't actually think there was going to be much to it, but I was proven wrong, and I'll happily take it.
Takes a bit of luck sometimes.
I like it.
Yeah, I think this. Sorry.
I was just gonna say I love your pictures as always, Josh. They're stocks that weren't on my radar, but I'll be paying closer attention.
That's right. One day you might buy one of them.
Mate, CZR, I do like cash backing, but handy. But I also just like
MD now. I think so.
Yeah, he's a good guy, MD. Yeah.
Yeah, and apparently Creasy's still relatively hands-on.
Yeah.
So, when they're trying to work things out and all of that, he's still pretty much in the game, even though he's richer than he has to be.
Yeah. When I'm punting on it,
it's a slow grind.
Oh yeah, I was going to say when I'm punting on an exploration stock, that's a one you shouldn't be holding. So I try to stay away.
Top of the cycle, and I should be selling.
Yes, Peter, please tell us what you've been thinking about lately.
Hey, folks! Great to be here and a big fan of the show. All right, so you asked about the best ideas, right?
Yes.
So to be honest, my best idea now and in the past quarter plus has been, frankly, cash.
Oi.
And let me elaborate on that just a little bit. So basically, with everything that happened last year, fantastic year for all commodities or most commodities, and I'm sure many of us here in this space as well. And with everything that's happening now in the markets and beyond markets, I think it's prudent to basically make volatility, your ally, and basically wait for the fat pitches to come as opposed to chasing momentum. And the way to do that, at least in my case, is by positioning myself in an opportunistic way. On the one hand, for simply holding plenty of dry powder, but then in the second half of the portfolio by being very aggressive but very deliberate as well with the kinds of plays that I'm coming into. So going for high risk, high reward, but very much bottoms up plays that don't need the broad market necessarily to perform well, to at least perform okay, right? So here I can mention two specific examples of how I'm applying this in practice. One would be, say, instead of holding a basket of gold producers that are all up 200% year over year, and are indeed enjoying very fat margins and all, life is great, right?
Yeah.
However, why not instead go for something like Awale Resources? So this is a Côte d'Ivoire exploration success in progress, very well funded, probably the best exploration intercepts in Africa in recent years, with plenty of catalysts coming in the coming year, who haven't really enjoyed 2025 that much for reasons that are company specific and are not necessarily valid anymore. So it's kind of like basically more opportunistic positioning from my point of view. And the second idea, or the second example, would be instead of holding a basket of, say, copper miners who are trading at or near all-time highs, how about go for some more niche industrial metals play that has been really beaten up in recent years and that did not enjoy 2025, again, for company and local commodity related reasons, but reasons that are kind of going away now. And here I'm talking specifically about the example of Largo
Ding.
and Vanadium, the Vanadium mine. So, this is the kind of thinking that I'm applying right now. Yeah, just happy to chat, go deeper into those examples.
You know what? I want to talk about Largo, and not just to talk our book, but because I think you tweeted something like, I don't know, I want to say it was like 8 months ago, and it was like you pointed out Largo's financing at the time, and you're like, this thing either is super talked or it goes broke in the next 6 months, because they just entered some pretty mental financing where they had a 6 month repayment on a pretty onerous kind of terms. They've lived to fight another day, but it's been a volatile interim. So that's when I first even learned that this company existed, and then sort of I paid subsequent attention when Vanadium became quite topical in recent history. But you've been there for a while, Peter, I know. So tell me about this.
Yeah, exactly. So it kind of actually goes back to the overall portfolio positioning, because if you have plenty of dry powder in the portfolio, then you can allow yourself, or at least I feel I can allow myself, to be more adventurous in some other corners of the portfolio. And Largo is a great example, right? If you look back at the past decade or so, vanadium tends to basically experience these massive cycles where it's left for dead, and then something happens. Either China happens, or China happens again, or like what we see right now, we see this kind of a decoupling, especially from the US perspective, in many commodities. But I think vanadium will be no different. If we look at the most recent events, such as the RFP from, what was it, DOD, I believe. I guess we can talk more about that in a minute. But basically, it's this sort of a almost binary bet. They either go bust, in which case you need to position size such that if they go bust, you're gonna live to the next day. But at the same time, if they don't go bust, which the odds are shifting, I would say, quite significantly in that direction, then with the current market cap of, what was it, like 120 US, something like that. And if you look into the past, they can easily. This can be a 10 bagger from the current price, just purely on the re-rate from basically not going bust, and vanadium going, kind of entering its cycle, which I believe it already has started. If you look at the vanadium prices across the board, both in the US, Europe, China, different products, pentoxide or ferrovanadium, etc. These prices are anywhere from 40% up in the past 2 months. You hear speaking specifically about the US, I think US ferrovanadium. In some cases, it's kind of around 10% if we look at other products in other locations, but the momentum seems to be already there. The direction of where the prices are headed seems to be clear. So now the question that remains, and that was the question last year when I first started looking into these and started building a position, and the question is the same today, is can they really survive until the point in time when the prices will allow them to stand on two feet, right? So I believe they need to secure around, and here maybe somebody can correct me, but around $80 million this year, just for the debt that is due this year. So how can they do that? Well, they have an ATM right now, which I don't have proof for that, but I wouldn't be surprised if they have this up and running in the recent weeks and so on. But obviously that would be a significant, and that is a significant overhang. But they have other tricks in their sleeve. They have the DoD RFP, which, if you look into the language of some of the documents, you need to dig deeper into those documents. But if you look into those documents, there are statements there where the US government is explicitly stating that they recognize Largo as a critical provider of a critical material for them. And they recognize that there is a risk of them basically going bust. And they recognize that they don't want them to go bust. I mean, it's not exactly what they say, but that's definitely how I interpret this language. So you have this kind of a backstop there, possibly from the US government. Then you have the additional, let's say, byproducts and waste products that can be turned into something valuable, such as the iron or calcine, I believe that was. And here actually there was a setback recently because they were supposed to. They had a deal to basically monetize that, and that deal fell through essentially. But they have a couple of those up their sleeve still. They have tungsten projects. What was the name? Northern Dancer, I believe, was the name of the project.
Yeah.
On the so and they
I was just gonna say on the iron ore. I think I did a little bit of digging to try and figure out how real or tangible monetization of that is. And as I understand it, every vanadium mine in the world has tried to find a way to sell the calcine solids coming off of the vanadium leaching plant, but it's essentially iron ore fines with titanium content, and the cost of moving it from the plant to port is just prohibitive. So yeah, the counterparty was probably the counterparty whoever did the deal with Largo. They probably just went to the Chinese steel industry to try to sell this stuff and quickly learned that it wasn't anything that made sense.
Yeah, probably. So honestly, personally, what I'm kind of accounting for as a possible scenario, it's hard to assign some probabilities here, but it is certainly possible, is that they may have to do one more raise or use the ATM to the full extent, one or the other. It's kind of whichever of these two. So actually, I wouldn't be surprised if we wake up one day and the Largo is down by 40%, right? Now, but the thing is that if you look at where is the ceiling of how high this could re-rate, I mean, I'm willing to take that bet, to be honest. Even if they announce another massively dilutive raise, and that combined with the DoD RFP kind of coming through for them, if that allows them to survive, which I think, as I said, it's likely scenario, then even if they go down by 40%, I think it's still a great deal. And actually, speaking of this RFP from the DoD, well, we haven't seen the results yet, so we don't know what's going to happen. But I think if they secure a decent contract, and here by a decent contract, I mean it's also likely that this deal will be at a significant premium to the current prices. How high of a premium? Well, you can do the numbers from the total expected value of the contract, and you can figure out like a range of possibilities. But regardless of what it is, it's most likely going to be a significant premium. It is going to be something like, I don't have this on the back of my head, but it's kind of maybe like 7% of their production. I hear somebody can correct me. But the point is that even if that contract spans across multiple years into the future, I wouldn't be surprised if with that contract in hand, they could actually borrow more money at good terms against that cash flow that's going to come from basically the most credit-worthy counterparty you can imagine. So that gives them yet another lever they could possibly pull once they have that contract in hand from the DoD. So they have plenty of these levers to pull. They also have been exploring ways to recover, I believe, copper from their processing circuit. Again, this is just like with this iron ore calcine. It's more of a long shot, but who knows? Let's see, right? So basically, it's all about playing the odds, and I believe the odds have already shifted in the right direction.
I love your thinking on this one, and I hope it plays out for obvious reasons. But I'd love to see your speculators' thoughts on this. I've never met anyone that can pick turnarounds as well as him. So if he runs his eyes over it, I'd love to know what he thinks of it too. I think we've just gotten Trent Buckle up. Trent, what have you got for us?
G'day, Trav, JD, long-time listener, first-time caller.
Great to speak, mate.
Actually, I've got some personal... Sorry, mate?
Great to speak with you.
Thanks. I've got some history with Largo as our prior presenter was talking about. I actually bought it $30 back in 2018. So
I was going to say,
no.
no one's got good history with Largo.
Oh no.
Whatever I say next should be taken in that context. But I wanted to pitch San Lorenzo, which is a much different stock to what I usually do, which is, your developers moving towards construction. But in this bull market, I think everybody's got to find back some kind of explorer and just enjoy the ride.
Yes.
Because they kind of they give you, plum feeler will know what I'm talking about, but they make your plums real juicy. So it's just a real good experience. San Lorenzo. So I heard Tom Auric talk about this 9 months ago. Nomad Geologist talked about it. As I looked at these drill results, I was like, it's interesting, but just this is not my kind of thing. Of course, I missed all of the best gains, but I jumped in at about $1. It's sitting at $3.20 at the moment, and there'd just been some big, news on the follow-up drill campaign at their number one target, Cerro Blanco. So this thing is, absolutely huge. Let me just pull up the deck here, but you're looking at like 1,700 meters up this mountain range in Chile, and they can't stop hitting, 100 plus meter sections, all at 1 gram per ton. Big step outs. They're showing a lot of width and continuity to that. So that's what kind of got me on board. Also, I got to say, jury kept pounding the table for it. So eventually I came around to looking at it. But the more you look at it, the more you like this thing. Their number one target, as I said, was this Cerro Blanco. I know Tom is in it for that, but if you talk to Al, he's more interested in this secondary target, Arco de Oro, which at first looked like it was a skinny epithermal vein system, 2.5 meters at 15 grams. They traced that for about 1 kilometer, hit it down at 300 meters depth. And then recently they had announced that they had an expanded drill program, and the step outs were 2.9 Ks and 3.9 Ks off the top of my head. So massive step outs. And I'm expecting that they're going to kind of keep hitting these skinny, high grade veins. And it's, looking much like a repeat of what they have at Cerro Blanco. They haven't got assay results for the top 223 meters, but the bottom section, it's split across a number of different sections of mineralization, all 50, 60 meters. You combine it for about 230 meters plus 1 gram per ton. So that's kind of showing up as a second major discovery. That's Arco Northwest. And then I was listening to the presentation of Al at MIF, and he's talking about this, and I should back up. One of the great things about it is they're just following their IP results and putting holes, tracking the best hits there, and the drill is hitting every time. So they're talking about this other IP zone they've got at Maria Teresa. And it's by far the best geophysical target they've got, but they haven't had the opportunity to drill it. And that is, again, kind of 4 kilometers from where they were most recently hitting. So this is just a story that, it's run hard, but I think it has potential to go, a long way with this 2026 drill program. They've cashed up for it. So, not sure what else to tell you. There's a third target. That's Cablo. Sorry, let me grab the name. Cablo Muerto, again, 100 meters, 1.45 grams. This whole area is just lighting up every time they put a drill hole into it.
How big do you think it is, Trent?
So, look, I was pretty sauce last night, and I said 20 million just to be the guy that says the highest number. But I saw Patrick Streeter from Argonaut put out his piece, which he was indicating more than 5 million ounces. A number of people have said 5 is what they're looking at. 10 would be excellent here. And I just said 20 in case it turns out to be 20. I want to be the first person that said 20. So who knows how big, but I got a good feeling this is 5 million ounces. But again, I'm a finance bro and not a geologist. So don't take my word for it.
Wow, these things are exciting. Love a discovery. The market cap's still undemanding.
Yeah.
I mean, it's what, 333 Canadian-ish.
Some of those hits are beautiful from the ultimate non-technical perspective.
Yeah. No, you love a bit of blue
I mean,
sky.
I like it as well. Exactly. So there's lots of boring, easy wins out there, but to jump on an exploration story when it's really hitting time and time after, again with other good people involved in the story, it just gets you excited. So that's why I like San Lorenzo.
You got all your chips still on the table?
No, I haven't. I was buying all the way to 250. So this is in the PA, it's 15% position. So in long and strong.
Love it.
Is anything not non-exploration that you've been big on lately, Trent?
I was about to start exiting Mika, and then when that turned into, it's probably moving to 1 million tons per annum throughput. They're going to do 95,000 ounces. The margin there is huge. That's something that's going to, it's what, 23 cents today. I got a fair value of 45 to 50 cents per share. I had a chat with Grant from Horizon Minerals today. That's sold off on their cap raise, which was a bit bigger than I think anyone expected. But
it's huge.
That valuation is what, 230 million. Look, the mine plan isn't great because it's only 5 years, but that will be extended. They will be able to bring more inferred material over into a higher confidence level and be able to extend that mine life. So, I'm modeling 8 years of mine life at 100,000. It's high cost, which actually I don't mind in this environment because it gives you that operating leverage as this gold price has kept running. That's could easy 3 bag from here. It's not a great asset in a lot of ways, but things that are have essentially a plant there ready to go. They've got to refurb it. They're trucking average grade ore around, but it works in this environment. There's no terrible elements to its mineralization or metallurgy, so it should go through the plant and have decent recovery. So Horizon, at $1, target on that should be 350, in my opinion.
Yeah,
easy 3 bagger.
Yeah, well, Horizon's just got the growth, big
and there's other assets out in that area that I think they're going to end up mopping up as well. So, I think that will just continue to add inventory to what will be a 2.5 million ton per annum mill out there. It's unconventional that they're switching it out from our nickel plant to a gold CIL plant, but I guess Medallion's doing the same thing as well. Some people are just kind of being flexible to get gold in the market and cash flow. So I actually like the strategy.
I like your thinking. Have we got any appetite, Twin? I saw you come back up. Give us your second stock you've been sitting on.
Yeah, it was an interesting one. It only really came across my radar today, actually. There's a small little play in the Lachlan Fold Belt that I was doing a bit of work on today. They're doing a 6-hole program out there at the moment. They're earning 70% of a project from Impact Minerals. So there's some previous drilling on the project, but I suppose the elevator pitch is today's price, close price there, just over 10 million market cap. They've got
what's the stock, sorry?
About 5 million. It's a company called Kuniko. So the ticker is KNI. So I don't know if you've been following this one at all. It's pretty small market cap.
Oh, the charts just goes down and down and down. It's one of those charts of death.
It's a chart of death, but there was a bit of life today after they announced.
So it had the whole Norway
So they
project, and then they've taken on Commonwealth and changed their focus to the east coast of Australia gold, right?
Yeah, I'm not interested in any of their other projects, but the project that in the Lachlan Fold Belt that they had some drill announcement on today sort of made me look at them and go, oh, hang on a sec, what's going on here? And they recently raised 3.75 million at 5.3. So this morning they were sort of around the low fives. They hit 6, but I think they closed about 5.7 today. So they've only just done a raise. Their EV is probably about 5 to 6 million. But what sort of flagged my interest was they're hitting some massive sulfides. And so the announcement today was, they did 3 of the 6 holes and they've hit massive sulfides. But you actually look at where they're drilling, and the project's actually got, in my view, some really good numbers. Like, one hole was 7 meters at 7 grams gold, 330 grams silver, 7.3 grams zinc, 2.7% lead, which wasn't far from another hit, which was 8 meters at 6.0 grams gold, 193 silver, 6% zinc, 2.3% lead. And they're thinking that there might be a feeder zone at depth. So
there's always a feeder zone at depth.
There's always a feeder zone.
There's always a feeder zone at depth.
But the interesting thing is, like with an EV of 5 to 6 million, to be hitting multiples at high grade, it's obviously a VMS type deposit. And I actually went back through the old Impact Minerals drill results, and they've got 25 meters of silver at like a couple hundred grams, with silver, these silver projects that typically weren't really loved, so the silver price is obviously allowing some of this to come back into vogue. And the old Impact Minerals estimate was around about 1 million tons at 2.4 grams per ton gold, plus silver, plus zinc, plus lead. So just as a gold project, like with an EV of 5 to 6 million, 100,000 ounces of gold at 2.4% open pit, plus, they've got other stuff, right? I looked at it and went, well, there's not too many juniors at a 5 million EV that are hitting these sort of grades. So I just thought, it was an interesting play. And they're just south of Boda, right? So they're in an interesting part of the world when it comes to geology and stuff. So, that whole Lachlan Fold Belt is definitely an interesting one. So I just think from a risk versus reward, I think there's probably more risks. There's more reward than there is risk on this one, I think.
Did you pick some up after reading the announcement today?
Yeah, I did, mate. I shoot from the hip a lot, so I tend to be able to look at these things and sort of put them in a bucket pretty quickly. And I just sort of went, well, it's not when you're looking at a risk versus reward element, you go, well, 5 million EV, and they're hitting, they've got effectively 100,000 ounces of gold, and they're hitting high grade VMS. Like, it doesn't take too much to pump them to 20, 30, 40 million market cap, which is multiples of where it is today. So, maybe it gets there, maybe it doesn't. I don't know. But just from a punting point of view, I thought it looked pretty good.
I like it. Sorry, Josh, was that you that I spoke over, mate?
Yeah, no, I spoke over you. I was going to say to him, just on table 1 in that report, how high grade do you think these hits are? Because they look quite pyrrhotite.
There is a lot of iron mineralization, but they're next to, like, the holes from today were basically wedged between 2 holes that were running 6 grams of gold and 300 to 400 grams of silver. So I would be surprised if they were anything too different from that.
Yeah, so I thought it was interesting, but then when you look at the table and that 3.7, intervals 85 sulfides, that it looks like pyrite could be a lot, and then they talk up to 20% sphalerite and stuff. So I'm just not sure how good. So it might be similar to what they've hit nearby, but when you're 15, 20 metre step outs, you'd be surprised not to hit more of the same. So
yeah, and the thing for me is there's been very limited drilling at depth. It looks like they've done some depth directly under the main shaft, which sort of got into a bit of copper. They think there's maybe porphyry down below. I just tend to think with this stuff, like there's very, very limited drilling at depth. And I think the chances of them finding something below is reasonably good from a punting point of view. And if they find something, it's worth multiples, right? If they don't, yet fair enough. It's more of the same, or it's a small deposit or whatever. But worst case scenario, they've got 100,000 ounces of gold open pittable at 2.4 grams per ton, which certainly I think values them at least 5 million EV. And if they find something at depth, or they hit one of these fat, if it turns into something nice and thick and fat, then suddenly it becomes a very excitable play.
Yeah. I mean, even if it's not that good, the market cap EV and the kind of market we're in probably makes you directionally right at a minimum. So
Yeah. And the fact that they've just raised, like in the last month at 5.3, like when you just put all the pieces together, like it's from that risk aspect, it's pretty. There's not too much downside. It doesn't take too much to transform something from 10 million market cap to 30 or 40. You know what I mean?
Too much downside, mate.
Yeah,
the chart just keeps going down.
Well, at some point it goes up, Trav. You just got to pick the moment it goes up.
I've just pulled it up in 3D. Kudos to Cane Toad for this capability. But so there's a bunch of other holes in and around this area here. Are they pending assays, or are they just historic ones that had nothing?
There's the whole bunch that have had something.
Yeah.
So there's a cross section on the announcement from today that shows the old Impact Minerals sort of drill work where they've done a contour. I think the confusing bit for some is that the drill holes directly under the main shaft start to turn copper rich. Like they had 0.8 at 2.2% copper and stuff. So I think where the stuff gets interesting is where they can work out what the hell's going on. Because I don't think they understand the geology very well, and they've done a bit of geophys around it to try and work it out. So I think there's one announcement that says that there's sort of targets that go on for kilometres and stuff. So, but it's one of those things where when you look at what EV they are and what they're drilling and what they're finding, I just don't think it takes too much to get the market excited in the right direction.
How are you, mate? Good to hear you.
Good. Sorry, I was in the middle of dinner. So, shooting from the hip here a bit. I mean, San Lorenzo is one of my big ones as well. That's become sort of 15% of my portfolio, and the other one's Andina, which is about 15% right now.
Yep.
But one that I've been getting interested in is where's my notes here? Lunnon Metals. Its ticker's LM8.
LM1. That's Lunnon.
So yeah, Lunnon.
Lunnon, because Lewin's LM1.
Yeah,
It's very confusing. Yeah.
So yeah, sorry, Lunnon Metals, LM8. So it's a 98 million market cap. I'm going to call them a gold explorer now, but they've got a bit of a nickel optionality. Because they were spun out basically from Goldfields.
Yeah.
And they hold a whole bunch of land around where is it, around St Ives and Kambalda. So they're in a pretty good historical nickel and gold mining area. But what's made them interesting is so they've got the Lady, what's it called? Lady Harriel open pit project. It's like a pretty small satellite mine. And that's they've moved that into production really quickly. So I think it was only discovered last year. And they very quickly have got that into production. They've done that because their major shareholder is still Goldfields. I think Goldfields holds about 30% of the company. And then among the top 20 shareholders with the board and management, they hold about 70% of the company between them. So it's pretty tightly held. They did a ore purchase agreement with St Ives, so the Goldfields subsidiary, and so now, yeah, they're already mining that. And I think off the top of my head, from the feasibility study that they did and signed off on in January, at the current gold price, they should generate about 50 million in future free cash flow. So that's interesting. At a 98 million market cap, it'll be mined out pretty quick. They end up with 50 million pre-tax cash at bank. And I guess it's similar to Twin's first one. It gives them, they've got some very interesting ground there. A lot of potential there for other satellite pits and stuff like that. And with that cash at bank, there's just, I mean, there's a fair bit of downside protection there, because I mean, they're not really going to tap the market to raise after doing that.
Yeah. I feel
Yeah,
like Lady Harriel's
so-
been around for a while, but it just wasn't the focus because it was a nickel company, and you've still got that nickel optionality at a pretty low implied EV as you get the gold production. Yeah,
Yeah, that's right.
yeah,
So I mean, they're not really talking about the nickel that much now. They have sort of very much pivoted when you listen to them and read their presentations to now going harder on that gold exploration. And yeah, it's just in this climate as well, where everything's a little bit volatile with everything that's going on around the world. That tight shareholder registry also appeals to me, because they're just not going to dump it. Yeah, so there's some good protection in there. So yeah, that's one that's on my radar. I've got a little starter holding in it now, so I do own a little bit, and yeah, probably going to scale it up a bit.
Awesome. I do like the point you made. The speed they've moved at is impressive. Clearly got a strategy that they're trying to execute on, and a few of the stars are aligning on that front.
Yeah, it reminds me a lot of New Murchison Gold, like what they did with Crown Prince. I think that's the other thing as well. There was just an announcement the other day as well. They did, I think, nine RC holes below the open pit plan, and let me just find. And so yeah, so similar to New Murchison Gold and Crown Prince, they've got it into production quickly, but they're still then drilling to prove that there's more at the resource. So yeah, so they did 9 holes, and they had some results such as 13 meters at 5.7 grams per ton, 10 meters at 5.88 grams per ton. So yeah, they're going to get, they've done their estimate based on getting 50 million free cash flow from this, but there's obviously more life to it than that. So that play worked really well for me with New Murchison Gold. I bought that one pretty early, and that's done really well. So yeah, I do like this in this environment when a company like this gets into production quickly, and yeah, gets that cash going.
I like your pitch, John. Appreciate your contribution, and we've got Jobs and Growth, who popped up as a speaker. What do you got for us, mate?
We chatted about nickel last week, but I've got a bit of a more interesting play for you this week. It's energy, if you're happy to talk about energy.
Yep.
It's an ASX listed company that has gas production in Italy.
Oh. We know this one. Yeah.
You know this one?
We do.
Okay.
Yeah. Give it to us.
I think I first bought this one about 10 years ago.
Correct. It's just starting to get interesting, having what's happening in the Middle East, and they're about to get their extra wells drilled in the Selva Malvezzi region. So it could be 2 years down the track from now, a 3 or 4x of their current production rate. And unlike the Australian gas producers, they're getting anywhere, but they're getting sort of upwards of 30 to 40 euros per megawatt hour. And obviously the CEO, Kevin Bailey, owns 26% of the company. He's bought all this stock on market. There's no outstanding warrants. Market cap's 85 mil, and they're sitting on 14 million of cash. So
ticker
obviously,
PVE.
Po Valley Energy, that's right. So obviously, the ticker PVE, 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 that's right. So obviously, So obviously there's been some changes happening also, which is a catalyst, which is the Italian government is changed a lot of their laws around the previous restrictions of development of oil and gas in the country. And they have this new mandate. They're trying to get the production level of gas up in the country. So this Selva Malvezzi region, they've got quite a prospective sort of lookalike wells to come online in the next 2 to 3 years. They are bigger than the current well, which is bigger than the current resource that the current well is producing out of. And they also own an offshore asset, which is Teodorico, which was approved and then got knocked back on an environmental appeal. They're going back to get this de-risked as well. So it's not impossible that in 2-3 years' time we're looking at a company that's currently priced at 80 million Australian with 14 million in the bank. They could be generating 40 million in free cash flow from just this one field, and it's quite an obvious takeover target for any of the other bigger European players as they start to de-risk these assets. Some risks involved, obviously, Italian government's notoriously slow at getting environmental approvals done. I think they have the sort of government persuasion to speed this up, and other than that, this is fairly low downside in terms of the constant gas idiocy that the Europeans are going through with their energy policy at the moment. Earning 30 to 40 euros per megawatt hour. This is going to be a cash cow if they get these assets de-risked. That's the elevator pitch.
Topical, relevant, interesting.
Very cool.
Yeah, I've got no special comments because I'm an idiot with energy, but I take your word on it.
Bit of homework to do on this one.
Lots of homework. Appreciate your pitch, Jobson. And
cheers, boys.
I noticed fluffing also come up. We'll make you the last pitch of the day, fluffing.
ALR is my pitch. I'm really looking for someone to tell me why I'm wrong and why it's not amazing. That'd be great because we start with the drill hits. So it is in Guyana. There's a few people think Guyana is in West Africa, but it's not. But it's part of the same belt. It's just on the other side of the world in South America. And when you go to some of the drill hits, they're just ridiculous, like 262 meters at 1.6 grams, 85.5 meters at 4.8. Just got some crazy gold hits. And it's right down the road from another billion-dollar company just to the north, clearly along the same geological feature, and a $2 billion market cap company further to the north than that. And then so far, they've done a lot of auger drilling. A lot of the drilling I mentioned is quoted as historical. So that's where I think people might be a bit worried. But there's so much of it. And then you look at the auger drilling they've done so far, down the same line, north-south, on this Occo West Fold and Occo Greater Occo South prospect. And it's coming up with buckets of gold as well. So at a 150 million market cap currently, with a couple of billion-dollar companies surrounding it and coming up with the things they're coming up with, I just think it must be undervalued, I suppose.
So when are the real rigs
going back over the?
Sorry to bad him. When are the real rigs going to be turning at W1 and E1? They've gone through the motions with the soil samples, the auger, and all that sort of stuff.
Yeah, and then a recent release only yesterday or today, I think it was, with some trenching and things like that they were doing. I actually can't put my finger on the exact date they're going to start drilling, but I certainly hope it's very soon. I guess the question is, like, if you believe the historical results, it's already worth more. If you don't, then fair enough, maybe it's fairly valued at the moment. But then you look at the historicals and go, well, even if half of them come back half as good, like if you hit 100 plus meters at a gram a ton in Australia, you'd be frothing on it. So, and just looking at all the maps and the size of the prospect they've got more land than the other companies mentioned, north and south of them. I just struggle to see the downside in it. So I'd love for some negative feedback on that one, but Altair is looking the goods.
It's a wonderful postcode.
Yeah,
can you help me understand the whole kind of tenure dynamics with these very segregated or fragmented blocks that have been somewhat.
Yeah, well, that is an interesting part of it. Yeah. So they got all these holdings in an exclusive deal with Adamantium Holdings, who are essentially mining and civil royalty in Guyana. So there's a suspicious level of like government, maybe some backdoor shenanigans. I don't know, but these guys are, as I say, mining elite. The sons of the guys who own that company sit on the board of the Gold and Diamond Miners Association of Guyana, and all these sorts of spurious connections that would say, well, not dodgy, but connected, I think more so, and should then have access to resources. So hopefully that expedites the drilling and maybe things like approvals and that sort of thing. But looking into the background of some of the guys that got these tenements off is definitely interesting as well.
And
and that's how they were managed. That's how they were able to conglomerate it. Yeah.
The resource that's there, that's on that North Peters to the west, but you don't own it for that. You own it because you think this Occo trend continues.
Yeah, well, I mean, the Occo trend alone is great. North Peters also looks good. So you go all the way out to the west, and they're still hitting 14 meters at 3.5 grams. And that's what, maybe 100 up to 50 kilometers to the west. So across the whole tenement package, it just looks like there's a lot to look forward to there.
Yeah, I'm no less intrigued than when we first spoke about it.
Yeah, I think as soon as we got back that day, JD and I were pulling up the screens thinking, should we just buy some of this stuff?
Trying to connect a few dots on.
Drunken idiot might have been right.
Yeah, we didn't, and here we are. Need to be convinced twice, but we're closer. Yeah. I think it's a really interesting one to watch, and I think you don't have to have too much imagination when you look at the peers in the area and the existing results. Like, I mean, G Mining is doing some pretty astounding things. There's obviously interest from other countries to acquire pretty significant like tenure in that area. I've heard rumours about founders being of interest and Omar Gold Mine, etc. But I think Altair is a really interesting company.
Let's not forget ExxonMobil have put Guyana Resources on the map as well.
Yeah.
And I mean, I'm trying to find sovereign risk or any other negatives, but I'm not really coming across any. So, looks good. And I believe the drilling is to commence mid-April, apparently.
Fantastic. Keen to see how that unfolds, and thanks for dialing in with the pitch, mate. Thanks everyone for dialing in. This has been wicked. I'm going to post this one up tomorrow.
Cheers, guys. Appreciate the tips.
Well, if there wasn't some alpha packed into that episode, we're going to do it again down the track, and maybe we should.
You're going to let me do it again?
Maybe we should start checking in on the performance of some of these names, and we can see which punters out there generate alpha for us.
We never hold the fundies accountable. I don't think we can do it to the retail guys.
More accountability. That can't hurt, mate. Huge thank you to our fantastic partners, Sandvik Ground Support and Exceed Capital, and to the legends at Intralinks and Focus, the platform by Market Tech.
You saw us using Focus all throughout this video. Go Hoodaroo.
Go Australia.
Now remember, I'm an idiot, JD's an idiot. If you thought any of this was anything other than entertainment, you're an idiot and you need to read our disclaimer.